Egypt recently announced it will inject 4.9 billion in stimulus to help its struggling economy. I'm joined by Jean-Paul Pigat, an economist at NBD Emirates in Dubai. So Jean-Paul, how much of a help do you think this will be, and will it be enough to please the public and prevent further unrest?
Yeah, okay, so it's the second stimulus that they've actually announced in the past year, two-thirds of which are going to be directed towards development projects, and one-third is going to be directed towards helping to pay for social programs and paying for the introduction of a new minimum wage. Obviously, a lot of this is going to be financed by aid from the GCC. In terms of how much of a help will this be, I think it's quite clear at this stage that there's quite a large output gap within the economy. So trying to bolster domestic demand through a fiscal stimulus should theoretically help boost economic momentum in Egypt. And I think it's particularly the case at this stage, given how weak private sector demand is at the moment. I would also say that it's encouraging that two-thirds of the stimulus is actually going to be spent on development projects. Infrastructure spending is critical for any economy's long-term growth potential. And when you look at fixed investment as a share of GDP in Egypt, that's actually fallen to around 14% in 2013. And that compares to levels of around 35% for what you would really want to see in an emerging market at this stage of development. It's also, positive that infrastructure spending is quite labor intensive. So that means that this new stimulus could actually go some way towards bolstering job creation. Now, in terms of your second question, is this going to be enough to please the public and prevent unrest? I think from my perspective, the short answer to that is no. Even if you think Egypt's main troubles are, purely economic in nature, which I would argue is certainly not the case. But if you do, the slight boost to economic activity that's going to result from this stimulus, it's going to be nowhere near sufficient to bring down the unemployment rate, which officially stands at 13.4%. But I don't think that rate is actually an accurate reflection of the job market, because the Egyptian Statistics Agency basically classifies anyone as employed if they worked at least 1 hour in the past week. So the real state of the employment backdrop is quite weak at this stage. And if you think that, I think around 700,000 new jobs need to be created every year just to absorb the new entrants into the labor force, we're still nowhere near that in terms of job creation in Egypt at the moment.
What else are you expecting to see from the central bank this year?
Well, from the central bank, I'm not expecting to see any significant changes. Since July, they've slashed rates by around 150 basis points, but they've held steady in the past couple of months because inflation has remained in the double digits. I think they might have scope for a further 25 basis point rate cut later on in the year if inflation ticks lower and if FX reserves stabilize. But perhaps the larger question at this stage is what impact will any further monetary loosening actually have on the economy? And I would argue that it would probably be fairly minimal. I think in terms of the central bank, more attention this year is actually going to focus on whether or not they're confident enough to begin loosening capital controls and moving away from their current FX auction system, where they basically only offer dollars to the market 3 times a week, and at levels of only $40 million, which is quite minimal. Looking at their reserve position at the moment, we're at about 3 months worth of imports, so that's still around danger level. So I wouldn't expect to see any big changes in that regard.
Finally, what is your growth forecast, and what will be the major challenges for growth this year?
So Egypt has a fiscal year running from July to June, and this fiscal year, which will end in June 2014, we have growth of around 2.8% in real terms penciled in. This is going to be the fastest pace of growth since 2010, which is definitely positive. But again, it's still well below levels needed to make any kind of meaningful impact on the employment backdrop. For the next fiscal year, beginning in July, we have growth of 4.2% penciled in. But obviously, this will depend on a degree of political stability emerging within Egypt. In the near term, I'm quite concerned about the outlook for the tourism sector, particularly in the Red Sea resort areas, which up until a couple of weeks ago, that was actually a bright spot within the economy. But there is a risk that the recent attacks on tourists in Sinai could see tourist arrivals start to decline. In terms of, what challenges, what are the greatest challenges, you can take your pick from a long list, whether it's, double-digit inflation or a budget deficit in the double digits, a lack of reform momentum. But in my perspective, it really does come down to restoring confidence at this stage, and that in turn depends on the political situation. So until we see the political situation actually stabilize from a more fundamental level, I think growth is going to remain below 5%.
Jean-Paul, thank you very much. Well, viewers, do stay tuned as we have plenty more interviews coming your way.